Hello friends, Huya, the number one gaming streaming company in China? How about Douyu? How did Huya do for 4Q2021? Before we go into financials, let's just take a look at the charts of Huya, Bilibili and Douyu. 3-month wise, Douyu has outperformed Huya and Bilibili, but we should not be confused over this at all. So it seems that Douyu has outperformed by only falling 9%, whereas for Huya dropping 24% and Bilibili dropping 36% on a 3-month basis. But is it really true? Because over on the 2 years time frame, both Huya and Douyu are down around 60%, whereas for Bilibili is up 48%. Since China cracked down on tech companies in 2021, live streaming and entertainment industries are not in the best growth years right now, but I will still keep my Huya predictions. These are just a series of regulations mentioned in China over the last year, whereas here is the series of regulations on the gaming sector. If you are not aware, Huya has previously fallen with the rest of the Chinese tech, like the Hang Seng Tech Index that have tanked so badly during this period. I've circled out here for Hang Seng Tech and here for Huya share price chart. But from a low price of around 3.28 USD, Huya has since recovered around 65% from all-time low to around 5.32 on the day it released its results for 4Q2021. So whoever wants to buy Huya right now has to recognize that the general sentiments of Chinese tech stocks will impact on Huya share price as well. It's not only pure financial results. Just to note that my thoughts are that the cash holding excluding certain current liabilities that I've made adjustment to works out to around 1.3 billion USD, which is a very significant portion of the current market cap, which is also working out to around $1.3 billion at 5.32 USD of Huya shares. Here's what I mean. So what is the market doing? It's effectively pricing the Huya share price at the same price of the cash that it had. So they're also assuming that the Huya is going to make losses going forward. Is this really a case? Why not we take a look at 4Q2021 results of Huya? Before we go into that, why not we look at the share price chart reactions for Huya on the day of its results announcement? What I can tell is that markets initially don't really like Huya's results performance, and that was why share price actually dipped below last closing price the day before. My initial thoughts, I obviously wasn't too pleased with the results on first look, given that Douyu's gross margin was around 10% and Bilibili gross margin was around 18 to 19% in 4Q2021. So what happens? Did anything go wrong with Huya? We really have to think through on whether the Operation Qinglan that's been undertaken in China in 2021, has it really hit the industry so hard that all these companies are making losses and they need to retrench staff? This is the Huya's mobile MAU they have done over a series of quarters, and you'll see that just like Douyu, Huya's MAU growth quarter on quarter is at a much slower pace at 0.4%. In 2Q2021, the growth of MAU was 2.8%. In 3Q2021, the growth of MAU was 9.7%. For 4Q2021, the MAU growth was only 0.4% quarter on quarter. So all the top line items fell, with net revenue falling 5.6%, mainly due to lower number of paying users from 6 million in 3Q to 5.6 million in 4Q, as well as the lower advertising revenue. So the next question is, can Huya reverse the downtrend in the paying users from 5.6 million back to 6 million or even more? There's a possibility. I will explain it later. A question that I would like everyone to think through is the decline in advertising revenue a result of economic slowdown in China? And if is that really the case, that the current China policy in 2022, like potentially reducing interest rate, releasing more liquidity, and being less stringent on the tech industry, can it halt the economic slowdown? And with that, will there be more advertising revenue for Huya going forward? It's important to watch this very closely. If one party is interested in buying Huya shares at this price point. Like what I mentioned earlier, MAU fell from over 300 million to 195 million in 4Q, which is a decline of almost 50%, and it hit its gross margin very clearly. One thing to be clear is that content costs and revenue sharing with creators has to be managed very carefully so as to reverse the downtrend in gross margin. Can Huya do it? Huya explained that there's a large esports event In 4Q2021, that lead to higher bandwidth costs that I can understand because you need to bring people who are not on this platform to this platform to take a look, so they need bandwidth commitment. At the same time, there's also higher content costs and revenue sharing impact on the gross margin. But not so good news is that sales and marketing expenses coming down slightly, around 5%, but it's not enough to stem the fall and to explain for the significant fall in advertising revenue of 50%. Because you want to spend more to get more advertisers to come on this platform, then you potentially have to spend more rather than cut the expenses. But I believe Huya is trying to manage its costs at the same time. Moving forward, interested party have to look at the gross margin very carefully. Huya is doing well at this at the expense of incurring more costs. As you can see that they have spent and signed a 5 years exclusive rights to LPL, a very significant event in esports. And this is likely to lead to increased costs, and with that, the widening costs could potentially also at the same time bring more content on Huya platform, will lead to a widening of MAU gap between Huya and Douyu. Can they make Douyu in such a bad situation that more influencers from Douyu will migrate to Huya? That's a possibility. It was rumored that Penguin Esports and other competitors of Huya and Douyu in China may be potentially shutting down its operations in June 2022, but there's no confirmation from the company from what I can tell. So at the same time, there's also a number of top gaming streamers from Penguin Esports have joined Huya platform. This is positive in the sense that there will be likely bring more fans from the other platform onto Huya platform, hence increasing MAU for Huya in 2022 1Q. For me, I do expect 1Q 2022 to be another quarter of losses for Huya, given the licensing rights amortizations of around 100 million RMB per quarter. If, however, Huya can find a way by drawing paying users from Douyu, which is around 7.3 million in 4Q 2021, as well as finding advertisement revenue growth, then the loss may be potentially much smaller than what it has incurred in 4Q 2021. If, however, there's no improvement to what I have shared here in terms of drawing paying users from Douyu, then losses in 1Q 2022 may be around 60 to 70 million USD. The saving grace is the huge cash holding that can last Huya for another at least 4 years of cash burn at this rate of cash burn. All in all, I will continue to hold my Huya's position given its market leadership in China, as well as the fact that it's doing well for its Limo TV, its international streaming arm. But the company must continue to find ways to reduce revenue sharing formula with its content creators, yet keeping them on the platform. Can they do it? As always, this should not be construed as any investment or trading advice. Thank you. Do subscribe to my YouTube channel and do give a like if you like this video. Thank you.